Interest rates are creeping down and the Fed is likely to keep rates steady for now. Meanwhile, most leading housing market indicators show further slowing in the market. I'll give you the details. Hi, I'm Jessica with the Genung team and Real Broker here with your monthly market snapshot of our local housing market and some general housing market news. Thank you so much for joining me, and I'm going to get right to it today. I want to start with this very interesting article that just came out from Redfin. A record share of home sellers drop prices as rates cut into buyers' budgets. Budgets are getting some relief right now, with daily average rates dropping considerably from 8% to 7.5% over the last week. We're starting this market report and my commentary with some good news for buyers, which is that rates have indeed come down recently. As Redfin said, they were pushing 8%, and as of the day I'm filming this video, the rates have fallen even further since Redfin published that article, and I show the 30-year fixed rate at 7.36%, which is the lowest that I've seen in some time, even though the Fed has not raised rates since the July meeting. By the way, if you are interested in tracking mortgage rates on a regular basis, my go-to source these days is called mortgagenewsdaily.com, and from there you can click on mortgage rates. This site, it's updated throughout the day, and I find it to be a lot easier to read than some of the other popular sites like bankrate.com. Back to the article. Sales prices are still up 3% from a year ago. That's partly because sales price data is a lagging indicator, reflecting deals that went under contract a month or two ago. Growth in sales prices may slow in the coming months as it starts to reflect sales that went under contract as mortgage rates hit 8% in October. I talk a lot about leading and lagging indicators in my market reports, and this is correct that sales prices are a lagging indicator. Some leading indicators for conversation's sake are mortgage rates, mortgage purchase applications, Google searches for homes for sale, and home touring activity. All of these are down except for mortgage rates, which, as I discussed, is a very recent development. We'll get to the stats in the second half of the video for our local Menifee, Murrieta, and Temecula city markets, and these are particularly helpful for us to get the real picture of what is happening here in our local market, because every market is unique. So here is one example of how unique our local market is. This Redfin article is national stats, by the way. Keep that in mind. The total number of homes for sale is down 10% year over year. Again, that's nationwide. When we get to our local stats, you will see the number of homes for sale, otherwise known as number of listings, is down more like 50% in our market. Big difference in that stat. While low inventory is driving some competition and relatively affordable homes in popular neighborhoods are still selling fast, they're getting 2 or 3 offers as opposed to 20 offers at the height of the market. With mortgage rates in the 7.5 to 8% range, buyers simply don't have the budget they would have had 2 years ago or even 1 year ago. This is exactly what I'm experiencing in our business. Lower priced homes and lower priced neighborhoods are more popular in our business than in years past. The city of Menifee, which is the most affordable city that we analyze, has the highest number of closed sales, and that has been consistent for many months. What is also very noticeable in our business is that the resale neighborhoods with the higher tax rates are not as popular as they once were. The newer construction neighborhoods have the higher tax rates in our area. When mortgage rates were 3%, these neighborhoods were hot and the higher special assessments were hardly an issue. As soon as the rates started going up, we saw a noticeable decrease in activity in these neighborhoods, with fewer showings and offers on our listings and less interest from our buyers as well. The sellers in these neighborhoods, they seem to be more negotiable, and obviously more so for the homes with the higher amount of days on market. For sellers in these neighborhoods that need to move, they are particularly motivated to sell because they have higher carrying costs due to the taxes. Even for those sellers who are accepting offers lower than asking, they are still likely locking in big equity gains. Even if they purchased just 2 or 3 years ago, it's not unusual for these sellers to have around $200,000 in equity gains. I thought this chart illustrates the payment shock potential buyers are dealing with. This is for the Seattle area, but these are similar prices to the Temecula single-family home market, which is hovering right around $770,000. Speaking of Seattle, Seattle and Portland area are 2 of the top cities our clients are moving from. These clients, regardless of political affiliation, as we've had both liberal and conservatives relocating from there, are often not comfortable with the direction those towns have gone over the past few years with issues like homelessness and crime. I just saw in the paper today that Jeff Bezos is even moving to Miami, apparently. Here's the chart. As you can see, they start in late October of 2021 when the interest rate was 3.14%. Your monthly mortgage payment was only about $3,200. So big difference when you jump down to October of this year, where mortgage rates are now 7.7% with an over $5,000 payment. So this illustrates the challenges that buyers are facing today. The discouraging thing for buyers is that even though mortgage rates have more than doubled, as you can see, home prices continue to march upwards. What do you think will happen to prices when the Fed lowers the rates back down? That is why the Fed is holding the rates as they are for now and have left the door open for future rate hikes. Fed Chair Jerome Powell did say at a recent news conference that the Federal Open Market Committee is not considering or even discussing rate reductions at this time. The jobs report just came out as I was filming this video. This is an article from Yahoo Finance. On Friday, the October jobs report showed 150,000 jobs were added to the U.S. economy, while the unemployment rate hit its highest level since January of 2022. The labor market slowdown is a welcome sign for the Federal Reserve, which has noted it is likely that more softening in the labor market will be needed to keep inflation on its downward trajectory. The jobs report adds to the growing reasons investors see the Fed stopping its rate hiking campaign. After the central bank held rates steady on Wednesday, investors largely interpreted Fed Chair Jerome Powell's commentary to indicate the Fed won't be hiking again in 2023. So to recap from earlier in this market report, the Fed Chair Jerome Powell, he's quoted as saying that they are not looking at cutting rates. And then this article is saying that the market is basically interpreting it that they are also not going to be hiking rates. So we're looking at the status quo for now. The market today liked that news, and the Dow and the S&P are both up on the day. If you are finding this information helpful, we would love it if you would like this video and subscribe to the channel. That lets YouTube know that we're doing a good job. We are going to get into our local market stats. As always, we are analyzing the cities of Menifee, Murrieta, and Temecula, single family homes only, but we're going to switch it up a little bit and we're actually going to go city by city. We're going to keep the city stats all together, whereas normally we're running through each stat one by one. So that'll make sense as I go along. But so we're going to start with Menifee, median sales price. So Menifee is our only city that the median sales price has declined. It declined month over month, 7,000, and that's down 1.2%. So Menifee appears to be on a slight decline. As always, 1 month does not make a trend, but the stats for Menifee, they're pretty consistent with a little bit of a decline across the board. Closed sales are up slightly. I call it flat, really, because it's only up 7 homes. So month over month from 104 homes to 111 homes. Median days on market are increasing, so that's consistent with the price decrease because homes are taking longer to sell, so it's natural that sellers might be a little bit more negotiable. It went up 8 days, so from 16 days to 24 days month over month. That's a pretty big jump in 1 month, so we'll see how it goes over the next 2 months in Menifee. Number of listings, I consider this fairly flat. It's down 6 listings month over month from 236 to 230, so it's flat in my mind. Number of listings, I'm not even going to go over the year-over-year stats individually, just because this has been consistent for many, many months. Our number of listings, our inventory for sale is down like 50% across the board. You can see the stats here, but I'm not going to keep rehashing it. Our inventory, as we know, and this is nationwide, it is super, super low. But as I mentioned, in that Redfin article, we're nationwide, where it was only down about 10%. Our inventory is down much more so than the national average, but this has been going on for months. Now let's take a look at Murrieta, which is the city that I live in, by the way. Murrieta is smack in the middle of Menifee and Temecula. So median sales price is up. Temecula has a very small gain. I'm going to call it flat. We're going to get to those in a minute, but Murrieta's is up 15,000 month over month. My opinion, if you look at the bar chart down at the bottom, you can see 2023 is the red numbers, and you can see last month in September it dipped from August. So I kind of think last month we just had an abnormal dip, which is, so 15,000, it seems like it's up a lot, but it's really just about even to where we were with August. So, but that is a $15,000 month over month price increase. Closed sales in Murrieta is fairly flat as well. It's only up 5 homes month over month, from 93 homes in September to 98 homes in October. So I'm calling that flat as well. Median days on market is creeping down 3 days. So from 15 days to sell a home in September to 12 days in October. And so decreasing amount of time on the market, the median days on market, that's consistent with a price increase. So those stats make sense to me. Number of listings month over month is only up 5 homes, from 215 to 220. So across the board, these cities, we have we've got 2 cities are slightly down as far as number of listings go, and Murrieta is the only one that's up 5 listings, but I'm calling them all flat because it's such a small change. Let's move on to Temecula. Median sales price. Again, this is kind of a theme of my report. It's very flat. It's $500, $500 increase month over month, which is nothing. But the bigger news here is if you look year over year, Temecula is up 73,000 year over year. So that's a really big price increase year over year compared to what's going on. Menifee, by the way, had a small decrease year over year. This month over month decrease put it into negative territory year over year. So Menifee was down 3,000 year over year. Murrieta was up 51,000 on median sales price year over year. And Temecula is by far up the largest, and that is up 73,000, as I mentioned. Let's move on to closed sales in Temecula. It is up 12 homes, so from 78 closed sales to 90 closed sales in October. So 12 homes, but I mean, just overall, this is just anemic sales activity. I mean, to be in double digits. It's crazy how low our inventory is right now. We've talked about the lock-in effect before, that a lot of current homeowners have, sub 4% mortgage rates. Some are even sub 3%. So that's why we have this nationwide housing shortage, because sellers don't want to sell because they've locked in those low interest rates. Median days on market, very flat in Temecula. It is up just 1 day. So not a whole lot of news there. It is down 6 days year over year. So homes are selling even quicker at this point this year than they were last year. Number of listings in Temecula, very flat, same story as Menifee and Murrieta. It's down, but just 2 homes, so not a whole lot of news there. So a lot of flat or barely up or barely down, so we're pretty much just chugging along at status quo. And I would say that this is fairly, I mean, like our number of listings volume, as I've mentioned a million times, is way down. But as far as the changes from month over month or month over 2 months, this is our normal seasonal slowdown as we head into fall and the holidays. And I expect things to just kind of be status quo for the time being. So I hope you found this information helpful. Thanks as always for joining us. If you have any questions, let us know down below in the comments or feel free to reach out. Okay, bye-bye.